guys, Louie here, and welcome to the weekend. I'm glad we made it. We didn't make it with all of our profits on silver and gold, but nonetheless we made it. And whatever you still hold, you still have. It is, just as important as it was a week ago when silver was trading at 27 to 28, actually a couple weeks ago. And I think I had said at the time that silver could be moving between a range of 28 and 25. Of course, I expected it to keep going up, and what we had was a drawdown, not to 25, but down as low as 22, which I'm sure was really disappointing to everybody, me included. And I have been making purchases and holding some paper silver as well. Unfortunately, this drop was so severe that I lost some money in the markets. As you know, I use the covered call strategy to hedge the downside, but nothing can hedge that big of a drop. So here we are at $23, and I guess my advice at the moment is to examine how you're feeling, right? When silver was moving up towards 30 and we were out there looking at, 35, 37, 38, $40 silver eagles, and we're just so anxious to be able to buy them in the mid 30s or the low 30s. And here we are today where they can be had certainly in the high 20s, if not the mid 20s. How do you feel about it, right? And I've had these feelings before when we've had major smackdowns. You don't even want to open your computer. You don't want to look at anything to buy. All you can think of is, what is that? That $7 loss, potentially, that you took on your stack. And it's those feelings that keep us from taking advantage of dips like this. But I would say that when you have these feelings, when you are wondering if you've made a mistake, when other people are, reminding you that you got involved with something that was highly volatile, and it is, those feelings are a good barometer that you really should be buying right now. And I want to go over a little thesis I have here to try to explain what's going on and why it is a lot of us missed it. Shout outs to some people that did, some other channels that did get it right in terms of predicting the smackdown, and this was nothing less than a huge smackdown. And that would be, Yankee Stacking. I think he was predicting this. Silver Bean Counter, I think, also had some good judgment in converting some of his silver to gold last week or the week before. So kudos to those guys for getting it right. We're all right at some time. However, the timing is so important. And I'm going to go through a little example here of what I think is going on and how I got it wrong, but how I will be looking at this in the future, not to sell. I'm not planning on selling, but what I want to do is examine, when you should lighten up your paper positions, when you should go heavy on your paper positions, and when you might consider exchanging silver for gold or gold for silver. So let's go ahead and do that. But yeah, big smackdown, about $3 below where I expected it to trade in the range. And here is why this is happening. First, a little look at that gold commemorative I bought last week, and I have 3 more of those to unbox for you today, which I got at a great price, so I cannot complain. Of course, the reason I was buying gold is that silver had gone up so dramatically that my 50-50 allocation to gold and silver was out of whack, and I really needed to increase my gold, but I did not want to trade my silver for it. In retrospect, I guess that was a mistake. So, but let's take a look at what's been happening, and I've made a little chart here. All right, what we have, as you know, there's a relationship between the U.S. dollar, the strength of the U.S. dollar, and the strength of gold and silver. And what we have been seeing is a devaluation, a loss in purchasing power of the U.S. dollar, and that has been driving the gold and silver price up. This started when the government started opened the repo window. Let me get you a view of the U.S. dollar here. And as you take a look at that silver chart, you know, way up and then down. Well, let's go ahead and look at the U.S. dollar. This is for the day. We're going to go back to the same time period, a 3-month time period. Okay, so you can see the U.S. dollar has been moving down, right, over that 3-month period, the same period that gold and silver has been moving up. And this was a prolonged move down on the U.S. dollar. I think it got down to 92. But what's happened here in the last few days is a very major spike up. I would call that a counter trend move up to 94 and change. And that is what is causing the drop. All right, this is pretty simple. But the way I want to explain this to you is that, you know, what there is the U.S. dollar. This is not actually the value of the U.S. dollar per se. This is the value of the U.S. dollar in comparison to a group of other currencies consisting mainly of the euro, the pound, and the yen, as well as some others. So this little dance that has been played, what I would say is happening right now, and it's become much more clear to me, is that we are engaged, the U.S. government having debased the monetary supply and become the funder of the world in the U.S. reserve currency through the repo window. You know, governments all around the world needed cheap U.S. dollars, and when they opened the repo window, the world was able to draw those dollars to do whatever they wanted to, repay debt, buy oil, whatever. So what's actually been happening here is in the beginning, the U.S. dollar was devaluing in comparison to other major currencies. Now, I had often said that I thought the U.S. dollar would strengthen because we are the strongest of the countries and have the reserve currency. But what's happened here is, I think, a situation where the U.S. has decided to move first. Okay, U.S. devalued its dollar, massive quantitative easing, it went down in comparison to other currencies that are up in comparison to the dollar. Not that they're so much stronger, but in comparison to a debased dollar, they've been gaining in value. And of course, gold and silver have been going up. And then that continued as the U.S. Engaged in distributing money directly to its citizens, giving away money to the banks and the major corporations. Again, the other countries weren't doing anything. They were waiting. And I think this is collusion at the highest level. So, you know, the U.S. government said, hey, wait, we're going to devalue the hell out of our dollar. Hold on before you do anything. So as the dollar was dropping even further, gold and silver, once again, were making an even bigger move. Now, about this time, we were all patting ourselves on the back, and we were looking at things like COMEX deliveries and historical charts based on inflation telling us that silver was going to be $200 an ounce. But that was anecdotal to what was really happening. What was really happening was the U.S. dollar destroying its currency and other countries waiting. They were waiting. It kept happening. Gold and silver continued to be pretty strong. Still not much from other countries. What has happened just recently? Other countries have begun to engage in quantitative easing at a massive level. All right, the euro, the pound, the yen, look for all those stories, but now it's their turn. I think at the same time, what the US government did is they decided the dollar has gone down enough. We're losing confidence, we're losing control of precious metals, and they decided to wait. You have to wonder why there was so much stimulus and so much support for the government, and then there was nothing. Well, I'll tell you what it was. US dollar at 92. Somebody said somewhere dollar is too weak. To Trump and the Fed and all of his buddies, the dollar is too weak. Hold off doing any more. Stop with all the intervention. We need to let it strengthen. The other countries at that point said, we're on board with that. We would love a nice big round of quantitative easing. And they started devaluing. What happened to the US dollar? Giant move, counter trend move up. What happened to gold and silver? Giant move, counter trend move down. Okay, that's where we are right now with silver at 23 or so. I think that could continue for a little while longer. And, we could see a little lower number on gold and silver as these governments get all done debasing their own currencies. And then once this dollar is stabilized, maybe it's 95, I don't know what the number is, then we go back to the top. All right, as we do this, the governments, our government and other governments, competitively devalued the dollar, and it looks like stability, right? And since gold is largely tied to the dollar, not always, but largely tied to the dollar, they can keep a lid on it. Okay, but what they can't keep a lid on is the intrinsic value of this metal. You can see the paper game, how the dollar would look to be worth the same as compared to other currencies that are competitively devaluing, but it is not. The one thing that I've noticed as gold and silver have dropped, my commodities basket of base metals and other tangible items has really stayed pretty strong. So if you take those dollars out and try to buy a pickup truck full of lumber, or you need some other base metal or commodity to build your products, it's still getting more expensive because the dollar is being debased, although it can't be seen from the charts. And gold is taking gold and silver are taking their cue from the strength of the dollar. But eventually, when groceries go through the roof, when that dollar, which there are much more of these days, are too many dollars chasing too few tangible goods, services, food, etc. You're going to have to spend a few of these to get that truckload of lumber or that copper wiring that you need. And therefore, it's going to spring back up in the inflation trade. But while we have been looking for the inflation trade in gold and silver has actually been taking its cue from the currency market. And there will be a divergence at some point where these metals keep going up when the dollar, no matter how strong it appears on paper, it will not be strong, and these assets will go back up. Now, when will that happen? Well, I think if you want to know when this game continues, when the dollar starts moving down again and breaks support, then you'll know that we're back into a bull cycle. But it's not going to be, in my opinion, a bull cycle to the moon. I think what this is going to be is a series of W's. all right? As they continue to competitively devalue, gold and silver continue to react up, down, and there will be probably a gentle sloping move upward of the precious metals, which would be much healthier actually than these moonshots we've been taking. So that's what I think is happening when we look at the charts on gold and silver. Hold on. I'm not going to show you all the charts, but here's a chart of silver, and yeah, a lot of wreckage there. But I'm not selling my physical stack, and I'm not selling my paper positions. I have paper positions in silver, gold, and platinum, as well as miners. My silver miners went down. They lost half of their gains from the high, but they're still up. When it started to drop, probably down around 24 or a little under 24, I added gold miners to my position, and I also added some penny stocks as well. And I'll show you those at a later time, but I'm bulking up my miner position right now. Yes, when it continued to drop, lost some more money, but I'm holding tight with all those positions because what is going to happen? They're going to go back into competitive devaluation of the world's currencies. What I would say about these charts is, from the people that I follow, experts at reading charts, predicting the future, watching the trends, watching the volume, and shout out to Juice Stacker right now. He's been all over this, and he also predicted a $7 move in silver, and he and I both thought it probably might go to the upside, but we weren't watching. He was watching the dollar, and he was concerned about that, but I wasn't watching the dollar carefully enough. So watch the U.S. dollar. But in regard to the charts, I was going to say it's split right now. Some people are saying that the charts have lost their trend line, gold and silver. Platinum's still looking okay, even though it lost a bunch of money. It is still it's still looking pretty strong. But gold and silver lost their bullish trend with this latest correction, and they're sitting below those trend lines. Other people are saying that the volatility of gold and silver is down, which is a predictor of higher prices, and these metals are well below their risk ranges, and now would be a time to accumulate. So lots of divergence in opinion out there in the community. Of course, turn off all the gold and silver channels that are still predicting $200 silver. What you want to know is what's really going to happen in the short term, because you want to buy at the right time. And though I got this wrong, I think this is where we're at right now, and I think we are at a buy. If you don't want to buy, notice your feelings, and you really have to work to counteract those feelings if you want to build a stack over time in a dropping market. I do think we'll have a turnaround here. I do think that probably both camps are right, that we are still in a period of weakness, and it could go lower. It could hit 20, I suppose, which would be really, really surprising. So let me tell you what I'm going to do. I'm going to unbox this gold for you. Actually, I'll do it right now. Hold on. All right, here they are. This is what I picked up. 3 more commemorative sets. They're just beautiful, 1986. I think this is the Ellis Island set. Comes with silver, nearly a 1/4 ounce of fine gold. And I guess that's a clad. I'm not positive what the third coin is. I don't think it is silver, but that's beautiful. All right, so there we have what I picked up. I picked these up when gold was like 1950, okay? Because this seller put 3 of these together, they were $1,500. That negated the sales tax, so the other coin I bought was cheaper, but I had to pay the sales tax. no sales tax on these, and so there it is. Now, what do I have here? And I want to show you how I plan on beating the system, right? You might say, well, this system is rigged for gold and silver. Here I have about an ounce of gold now. And I would love to keep it, but I think what I'm going to do instead is I'm going to play the ratio. Okay, another good friend of mine, Carl Ushanka, wrote a book called Trade the Ratio. And if you are trading the ratio, you can take advantage of one thing. Everything works against you here, right? I mean, you can hold and hope, and over time you'll be right. But if you want to take advantage of this system, here's what I plan on doing. So I'm going to take my ounce of gold, right? And I'm going to hold on to it, and I'm going to wait for the gold to silver ratio to change. Now you've noticed that silver is falling more rapidly than gold, although gold has lost its bullish trend as well on the charts. So will gold go to 1800? Will it go below 1800 to 1750? I don't know. I don't think so personally, but could be wrong. But we know one thing for sure: silver overreacts. Where are we right now on the gold to silver ratio? We are right about at, I can't hold this and do this at the same time. We are right about at, well, we know we went, get you a better view there. We know that, historically it's been something like, 70, right? And we know recently we were at 120. That's when you should have converted all your gold for silver. And then more recently, we've been trading back around 70, right? Kind of the norm. Right now, we're at 80 or 81, something like that. What I propose to do is if and when the gold to silver ratio hits 90, I'm going to convert this gold to silver. I'm going to take this 1 ounce of gold, which I think is good, reliable. I think LCSs like commemorative coins. And I'm going to ask them to convert it into approximately 90 ounces of silver. And then I'm going to wait. Well, I just lost my screen. Oh, hold on. And then I'm going to wait. What am I going to wait for? Well, if silver drops down to 21 or 20, whatever gets us that 90 to 1 GSR, I'm going to wait. And you know what will happen eventually as this paradigm plays out again and silver overtakes gold again, which it will, in my opinion. When we get back to 70 to 1, I'm going to convert it back into gold. All right, and in doing so, the math on this creates about a 25% upside every time you convert. All right, so what I want to see and what I want to demonstrate, hopefully over time, is that we can use the volatility of silver in comparison to gold to our advantage if we're willing to trade the ratio. And right now that ratio is going up. And I sure hope it hits 90, because when it does, I'm going to truck on down to the LCS and bring back, about 90 ounces of silver. Okay, what kind of silver? Well, it won't be high premium silver. I mean, if he wants to give me eagles, he can. But, as I've been saying, and many, many channels have been saying, don't chase the high premium silver. And I'm not talking about collector coins. I'll unbox something for you tomorrow that I bought that already has a $10 profit on it. But don't chase the high premium. Now you're noticing the premiums evaporate. And actually, I noticed the premiums coming way down last week or even the week before. I think I even titled the video Lower Premiums. That was a signal. Okay, that was a signal that inventory is coming back. Premiums are going down. If you're paying high premiums for eagles or something else, then you're probably buying at the wrong time. And I know some did because they didn't have a stack yet and they wanted to participate. But the biggest losers in this move are the people that paid in the high 30s for Eagles. And if they went to sell them today, they would probably get about 27, maybe 25. All right. Huge loss there. So same thing with the junk silver. As I told you, don't ever pay high premiums on junk silver. Premiums are dropping like a rock as supply comes back on the market because people see this chart and the first thing they want to do is liquidate. Okay, watch your emotions. Whatever they're telling you to do right now is the opposite of what you should do. All right, so watch those high premium coins. I don't want them. I don't want to pay those premiums for times like this when we get a crush. So that is what I think is going on in the markets. I hope that that made sense, and that is the way I'm looking at it. I'll be watching the US dollar, and over time, you know, watch the inflows and outflows on the SLV GLD as well, because I think that tells you, you know, how the market is reacting right now. But mostly watch that US dollar and enjoy your stack. And if you're looking to buy, today's a great day to go do it. Low premiums, low spot price. You know, this would be excellent time to look, even if you're outside of your own country. All right, I think I've gone on long enough. I'm starting to ramble, and that makes sense. So there you go. Do you like my commemorative sets? Get that eBay credit card if you want to pick stuff up at a 3.3% discount. And I don't know. Hang in there. Hang in there. Let me know what you're thinking. Okay, guys. Bye-bye.